Welcome back. One of the big movers of the last 1 year or so has been Gensol. I remember the stock the same time last year was close to around 293 odd rupees. Right now, you look at it, it's moved to 1285. So not only has it been a near six bagger, you've seen a big surge in the company's financials as well. What exactly is happening out here and what the guidance for going ahead is something that we will be speaking to. They also won a PLI bid for hydrogen electrolyzers. And importantly, they are raising 900 crores via preferential warrant issue. This is something that they announced earlier this month. Anmol Singh Jaggi, who's the chairman and managing director of Gensol, joins in now to discuss these developments and more. Thanks a lot, Anmol, for joining in. Two-part question. One, this fundraise that you've announced, what do you need this for? And secondly, I remember the last time you joined us, you said for the full year, you would do revenues of close to around 1,500 crores. The first 9 months, it's sub 600 crores. So should we assume that that guidance is off?
Yeah. Hi, Mangalam, and thank you for having us. First, on the 900 crores that we have raised. So the money is already been raised and we are in the process of doing the EGM. Post the EGM, we will have the money coming in around close to 10th of March. And we have had very good funds like Elara Opportunity Funds, Aries Opportunity Fund, Tano, which is come into our cap table with this 900 crore raise that we have done. On the revenue front, we have grown last year, FY23, we did about close to sub 400 crores revenue. And this year, we should be, with God's grace, touching slightly above 1,000 crores. That's where we would be. So yes, are we off from the 1,500 crores? That's absolutely true. But on a year-on-year basis, this is from 400 crores, we have grown to 1,000 crores, close to 1,000 crores.
Okay, hi Anmol. Good to speak to you and good to have you on the show. So you're admitting that this year you're going to fall a little bit short of expectations. But as you said, by God's grace and with the hard work that you all are putting in, for FY25, what kind of a revenue guidance can you give us? Point number one. And also give us a margin guidance for the company on the whole.
Sure. So for FY25, the three segments that we have, all of those put together, the three segments is EPC, EV manufacturing and EV leasing. The three segments that we have put together should clock in more than 2,000 crores in revenue, which will be which will be 2x from our FY24 numbers. If you look at last 6 quarters of our margins, we have consistently delivered about 15% EBITDA margin, and that's what we expect for our FY25. So about 600 crores of EBITDA margin consolidated and about 5% of PAT. So we will be about 5-6% of PAT will be for FY25. So we'll be about 120 crores of PAT for FY25.
PAT of 120 crores and EBITDA of 600 crores.
Yeah.
Okay, got it. But just one more question. You're raising this 900 crores approximately. And I think the promoter stake, the last as of December, was around 62% approximately. Till what level are you comfortable diluting your holding? Because you're the largest shareholder, right? And you've got a plan for the business. So till what level would your dilution continue? And what's the minimum possible level that you'll hold in the company?
Sure. So out of the 900 crores that we have currently raised, 150 crores has been put in by promoters. So we are trying to of course, there is going to be dilution, but we are also being very, very cautious about the dilution that we would do. My numbers say that if we put in we are putting in 150 crores out of the 900, our dilution will fall to about from 63% that we currently hold to 55% that we will have. I believe that 55%, above 50% is a great number as a founder to have a great percentage in the business, and we will continue to be above that number. And like there are other businesses and we continuously generate a lot of capital capital from other businesses also, which help us to keep maintaining our stakes in various businesses.
So, just wanted to understand that you are diluting these funds, rather diluting your stake for these funds. What exactly do you require these funds for? What are you going to invest this money in?
So I think Gensol is on a hyper growth when it comes to numbers, and all the three businesses, EV business, manufacturing business, leasing business, and the solar EPC business is doing absolutely great. So we will, out of the 900 crores that we are raising, we will deploy about 300 crores as working capital requirement for primarily for our EPC business. About 200 crores will go towards the EV leasing business. Another 150 crores will go towards the EV manufacturing business, and rest we have kept it as open for whichever businesses. About 200 crores is kept as reserves for whichever business requires more capital.
Okay. All right. I wanted to ask you about this EV manufacturing business. Now, that's the one that not only our shareholders will be excited about, but maybe even consumers. And we have seen a couple of other companies, other conglomerates have tried their hand at this. I think it's a two-wheeler and a three-seater, three wheels and two-seater, right?
Yes, absolutely.
Okay. So the last time you spoke to us, say around 9-10 months ago, you sounded very optimistic that things will get up and running. But I think all the approvals are not come. Maybe a couple of approvals are still pending. So a couple of questions here. By when do you get all the approvals? And by when do you start selling these units? I think you have a capacity of 30,000 tons, 30,000 units. For FY25, how many can you sell?
Sure. So we are absolutely, like you mentioned, just about 2 approvals pending for the vehicle, and we should have it in early part of in the first week of March. We should have those approvals kind of come in, like really the fag end, absolutely fag end of the approval process. We will take about 60 days from there to start our trial production. So early May is when we can start the trial production from the plant. In FY25, we expect to sell 5,000 vehicles, and those 5,000 vehicles will accumulate to about 300 crores of revenue. We are purposely going small on just 5,000 vehicles that we want to build. We are trying to test those, trying to get those vehicles on the road, deploy about 5,000 vehicles, take a lot of customer feedback, and if we need to improvise on anything, improvise, and then go for the full kind of blowout on manufacturing.
Right. I wanted your thoughts on BlueSmart itself. Of your leasing business, how much comes in from BlueSmart? And is there any cross-holding between Gensol and BlueSmart?
So there is no cross-holding between Gensol and BlueSmart. Both the companies are, Gensol, me and my brother are majority shareholders, and in BlueSmart also myself and my brother are majority shareholders. But from a leasing business perspective, out of currently close to 900 crores of EV leasing book that we would have about 600 crores towards the BlueSmart.
So would you at some point look at, some sort of corporate action between the two, maybe merger, conglomeration, reverse merger, likely because BlueSmart makes a lot of waves around the startup world, the kind of fundraising that it's doing. You go to Bangalore airport, all you see is BlueSmart, and the kind of buzz that it is generating, I'm sure that it will create that kind of value as well. Would you look at some point reverse merging the two and giving the retail investors an opportunity to be a part of BlueSmart as well?
So as of now, Blue is right now in a loss-making way as we are expanding very fast. So we would first wish for BlueSmart to turn profitable. I think retail shareholders in India love the fact that companies should be profitable and cash flow positive. So it will take us between 4 and 6 quarters for BlueSmart to turn cash flow profitable. Once we have turned profitable, we can look at all avenues, including the ones that you mentioned.
Okay, all right. And since, as a retail investor, people are excited about the company if they got it at earlier levels. But for a new investor, they are wondering, there's lots into it. There's EPC, there's EV leasing, you're going to be doing EV manufacturing as well. At some point of time, will you think of demerging it? The last time around, you said no, but you're scaling up big time now. So do you think at some point of time, you look to separate it, keep the EPC out of it, keep the EV part of the business out of it?
I would wish to say that my personal ambition would be that all these 3 businesses are large-scale businesses and listed independently: the EV leasing business, the EV manufacturing business, and the EPC business. Now, the timing of the demerger or could be between 12 months, 18 months, even later. But we would wish that all of these 3 businesses on their own standalone be large scale businesses which can reward shareholders independently of each other. I think
12 to 18 months you are looking to demerge. 12 to 18 months you're looking to demerge these businesses. And when you say large scale, how big will each of these businesses be before you demerge them?
So I think there is no call on the demerger that we have. I believe that in 18 months' time, the consolidated revenue of the three businesses will be multiple times of today, and at that scale, it will make sense for these businesses to be independently listed.
Okay, so maybe by FY27 we could look at 3 companies being listed, right?
Yeah, probably it'll be. I'll be extremely happy if that can happen.
And Blue Smart along with that at some point.
Sorry?
And Blue Smart along with that.
Blue Smart, and then we have Matrix also. So why not Blue Smart, Matrix?
Indeed.
So
Indeed, we're running out of time, but we have taken note of that JV that you'll have announced with Matrix as well. And thank you for joining in, Anmol. I was just doing a back of an envelope calculation. I think the new vehicle, once it's on the roads, it'll cost us around 6 lakh, right, per vehicle.
Yeah. Absolutely. So that's the segment that we want to get to, because we believe it's a blue ocean segment and nobody's focusing on that.
We'll look forward to that, but we'd also hold you on your numbers for FY25. 2,000 crores of revenue, 600 crores of EBITDA, and the profit number of around 120 crores. We've noted all those 2 numbers. Thanks so much for joining in and filling us in with all of those details.
Thank you.
For the time being, though, we'll have to slip into a short break, come back, continue our focus on markets and other stocks that are on focus.